We know better than anybody how long it takes to look into tax provisions, so we did the work for you. With our most recent white paper, you can download all of the information you need to figure out how current tax law might affect your financial situation for this year. So let's get started. We've got this 2-page document that pretty much lays out all the rules that are out there. First and foremost, over on the left-hand side, that's our current tax rate schedule. So that breaks down by your tax filing status what tax rate you're going to fall into based on your taxable income. So it's separated into single tax filers, married filing jointly, head of household, married filing separately, etc. So that's pretty straightforward, but there's a ton of other information on here, and some of it can be surprising to some people, so I wanted to dive into a couple of different areas. First and foremost, I wanted to talk about long-term capital gains rates. So for most people, the long-term capital gains rates that they're going to be subject to is 15%. So that's the tax you pay on any growth on an asset that you've sold after holding it for at least 1 year. However, it can actually be 0 or even 20% depending on the amount of total income that you have. So you want to really pay attention to that so you understand the impact of selling various assets. In addition, there is the net investment income tax, which is an additional 3.8% tax on any investment income. That kicks in if you're married, filing jointly, if your income's above $250,000, and if you're single, it kicks in at $200,000. So another thing to really pay attention to, depending on income year by year, if you're selling assets, you want to understand the full impact of doing so. The next thing I wanted to go over was the way that Social Security income gets taxed. Many people don't realize that your Social Security income may be subject to federal taxation. How much tax you may pay on your Social Security is dependent on how much other income you have. So something called your provisional income gets calculated by taking 50% of your Social Security benefits and then adding in your adjusted gross income plus any tax-exempt interest you might have. That all gets added together, and depending on where you fall on this scale, that determines if and how much of your Social Security is going to be subject to tax. So you might have none of your Social Security taxed, or you could have up to 85% of it taxed on the federal level. California actually does not tax your Social Security benefits, but there are a handful of states that do, so you do want to be aware of that. In addition to Social Security, something that many people don't really realize is the impact of your income on your Medicare premiums. So every year, your Medicare premiums are reevaluated. So for example, for next year, for 2022, they're gonna look at your 2020 tax return. They're gonna look at your adjusted gross income, and that is going to determine how much your Medicare premiums are going to be for that year. And what happens is it gets reevaluated each year. 2023, they'll look at 2021, and so on and so forth. So if you have a year where you've generated some higher income than usual, you will end up with higher Medicare premiums, but it's a 1-year adjustment. It'll then get reevaluated again the following year. So something to be aware of. I also want to talk about the various limitations on income for funding your IRA accounts. So if you're still working, still have earned income, typically you'd be eligible to fund a traditional IRA contribution that would be deductible, or a Roth contribution. However, the eligibility to do either of those is determined by the amount of income that you have. Traditional IRA tax-deductible contributions has a much lower limit on income. Roth has slightly higher. But with these, you don't actually have to know. You have until April 15th of the following year to make your contributions. So you can get through the entire year in case you have a variable income source or something like that to really determine whether you'd be eligible or not. And the tax deadlines, not only for making contributions to your retirement accounts, but for some other things are really important, and that's dealt with here. So right now, most of these deadlines have passed, but coming up is obviously September 15th. That's the deadline for anyone that's making estimated tax payments. The third installment is due September 15th. The October 15th, just a month later, is the deadline for filing your taxes if you filed an extension in April. Then December 31st, certainly if you're buying or selling stocks to realize capital gains or losses, that has to happen by December 31st. If you're doing a Roth conversion, that has to happen by December 31st. Again, if you're making estimated payments, the fourth payment is actually due the following year on January 15th, and then April 15th, the standard tax filing deadline, along with the first quarterly payment for that upcoming year. So again, a lot of information on that sheet. I just wanted to dive into a few areas that tend to surprise people, but for further information or questions, feel free to give us a call or send us an email. We're happy to answer your questions.